Aloha and welcome to the Module 5 worksheet overview. I think you'll find this particular worksheet fairly straightforward in Module 5. This first part, 5.1 and 5.2, are effectively talking about things that relate to fraud, as well as things that just simply happen. Okay, so you have errors, which are accidental type of things that cause misstatements in the accounting records, and you have irregularities, which are purposeful misstatements in the financial statements, either due to theft or actually changing the numbers to be misstated. Okay, and then the fraud triangle, which is pressure, opportunity, and rationalization. When all three of those exist, it tends to lead to more fraud. And the role of internal control in minimizing the fraud triangle and errors and irregularities. Okay, so for this first one, all you need to do is read the scenario and you just determine whether this is an error or irregularity. Do you think it's an indication of fraud? And how do you think that will affect the balance sheet? In other words, what was recorded, based on this information, what was recorded, what should be recorded, and then indicate whether the accounting records, based on what was recorded, is over or understated, okay, in relation to what should be recorded. Okay, do that for the next one as well, and the next one as well, okay. Then we're going to talk about different types of controls: preventive controls, detective controls, corrective controls. And here, what you want to do is just come up with an example. Think of what you could do to prevent this type of error, or detect it, or to correct it. Okay, that's kind of up to you. It's kind of a free-flowing type of thing based on your own knowledge and logic. Number 7, you can handle that as well. Then we're going to get into the bank reconciliation. Now, I really hope you've watched the videos that talk about how to perform a bank reconciliation. But really, when it comes down to preparing a bank reconciliation, what you do is you start with the amount per the bank. This came on the bank statement, and it hasn't been fixed yet for things that you, per your books, know. Okay, so you're just going to get the bank statement just like you get in the mail, and you're going to write down that number. And then per books, this is what's in your accounting records, and it has not yet been adjusted for what you're going to discover on the bank statement, which you're going to get in the mail. So you write down those two unique and uncorrected numbers. Okay. Then what you do is you read each of these and you say, which of these two entities already know about this particular item? For example, the company made a deposit of 137, but the bank has not recognized it yet. So this 137 will already be in the books number, so don't adjust on the book side. But the bank doesn't know it yet, so that means the number per bank has not been increased yet for this deposit. So you'd have to say deposit in transit 137, and you'd add it to the bank side. So just work through each of these one by one and ask yourself, who already knows about this and have updated the records? And then you update the opposing side to make sure it matches. Now, if they both already know about it, then there is no adjustment on either of them. Okay? If you've done this correctly, you're going to come down to the bottom, and the total per bank after all these adjustments, and the total per books after all these adjustments, will be exactly the same. Okay? So, that's then you're going to answer this question. Based on our adjusted balances, does it seem like we have enough cash on hand to pay our employees the amounts that we promised them? Okay, so that's pretty much it. This is something that everybody should know how to do, is reconcile their bank statement, and I hope you learn it. I wish you all the best. Aloha.